Hey all, welcome to ShareTreck. This is Raj here, friends. Today we're going to talk about what's happening in the market. There has been a sudden change of momentum. Things are not looking as rosy as they used to before for the Mag 7 and the AI stocks. Let's take stock of what is happening. Previously, I had mentioned that there is a sectoral rotation taking place and that the small cap stocks are doing better than before. We saw the IWM, it was just jumping across, creating gap ups. So is the trend going to last? And how our shares are going to work on and what I'm planning to do. All those things will be covered here. Especially we're going to talk about those 6 or 7 AI stocks for whom we had a price target, for whom we were watching bearish divergence. We're going to see whether they are showing any signs of improvement and if the things can turn around. So with that said, let's get started. Welcome back, friends. We are here at the TradingView platform and we are looking at the NASDAQ futures. Each of these candles is a one-day candle, and therefore I think you will find it very, very scary that today's candle is such a long red candle. And if you look at the momentum, it has fallen just to average, which means I can't say today that the momentum is healthy and it's moving in the wrong direction. MACD is also moving strongly away from the signal line in a very bearish manner, and those red histograms indicate a huge shift. But I am still of the opinion that things will turn around. This is just a knee-jerk reaction, and I think the real value is still there in the AI. The earnings report that are due very soon are going to set the direction for us. I would say that we have to look at all aspects and try to glean some information on whether there are any underlying changes that are happening. NASDAQ, of course, is going to be the same as the futures. It is dropped down. The NASDAQ futures candle was longer because it happens pre-market and then goes on during the day. It's a longer duration for the market, so more or less they're in the same level. And as far as S&P 500 is concerned, where is S&P 500? Let us take SPY as a proxy for S&P 500. It's down minus 1.31%. QQQ is down 2.77%, just in line with NASDAQ. So things are not looking that great overall. Gold has also lost a little bit of its gains. And VIX is going up further. And we had plotted yesterday the double bottom target for VIX, which is 15.66. Right now it has reached 14.55, so I'll give it another 1 point, and then I'm expecting that it would turn around from there or it will get pushed down from 15.88. That's my current bet. You can see that there is still room on the RSI for the VIX to move up, and also the MACD is very bullish and moving away from the signal line. So all of that seems to propel VIX to go and challenge 15.88. And as VIX goes up, we'll find our share values going down. And as VIX comes down, we'll see volatility is less and share values will be much better. So that's what I'm thinking at this point of time. The put-call ratio is at 0.81. That suggests me that there is a bullishness still in the market. So the price could come up. It's not extremely bullish, but it's reasonably bullish enough to give me hope for today. And I would like to see what happens tomorrow. Having said that, I'm going to get into the AI space so that we can look at all our shares quickly. Tesla is down 3.83%. It has gone below the resistance of 255.91, which was earlier a support. Now it's a resistance. We still have the 9-day exponential valiantly trying to support the price line here. 9-day exponential is at 246.19 and Tesla is at 246.80. So there are just a few cents which are separating Tesla price from the 9-day exponential moving average. One hopes that it would be able to support the price for today so that we can see tomorrow and look at what can be done. Now there is another golden cross here that was formed yesterday where the 50-day exponential crossed over the 200-day exponential. So that's also a positive. MACD is again tending to move towards the signal line to cross over, but the intensity is not that high. Momentum is still quite high, so I'm still hopeful for Tesla. We'll have to see whether it breaks through the 9-day exponential, in which case I'll be a bit worried. Next, let us look at FNGU. It has lost 10.54%. But friends, remember, this is XXX, the effect. So it's magnifying it by 3 times, and therefore it has lost around 52.99%. I am holding 50 FNGU, and I think the loss out there for me is close to around 2,000 approximately when I last checked. I also have FNGD, which is giving me a profit, and I have around 200 FNGD or 134 FNGD, something in that range in a different account. So let's come back to FNGU. FNGU is showing that it's fallen below the average momentum, and the momentum is below average, as well as the MACD is very bearish, moving away from the signal line. And we have broken down from the 9-day and the 20-day exponential moving average, converting them into a resistance. And we are now looking forward to a support for us from the 50-day exponential moving average, which is this green line out here. I'll also draw another line of support out here I'll peg a line of support out here, which could be a minor support after the 50-day exponential moving average. And we'll draw more support lines if required. I'm just going to change the color to green. Let's look at Microsoft. Microsoft is down 1.41%, and it's moving down. Momentum is below average. That means interest is less in here. MACD is also moving away from the signal line. I'm looking at this as a buying opportunity, dollar cost averaging opportunity. How low can it go? I don't know, but there is deep value in Microsoft. And if you look at Palantir, Palantir has lost 1.95. I've sold covered calls for $28. So I'm looking forward to an opportunity to capitalize on that, because I think the call expires this Friday or end of the month. Let me just give you the date. The call expires on 26th. So I'm hoping that I'll be able to keep all the premium if the share continues to fall. So I'm happy with that. But Palantir is generally getting support from the 9-day exponential, and unless it breaks down, it's not going to test the support at 27.44. Momentum is pretty good. I'm happy with the momentum. MACD is moving towards the signal line. That's what I'm worried about. Amazon, I think, is a strong stock, but it has done very poorly today. It's lost 3.24%, and it has fallen below the line of support at 189.18. So I'm going to mark this red. And momentum is below average. MACD is also very, very negative out here, bearish. I don't see much good coming out of it, but it's in a holding pattern. We have got earnings coming up on 25th of July, which is not too far off. That could be a catalyst. And I'm pretty sure with the Amazon Prime Day happening today and all that, there'll be a little bit of hype and momentum pumped back into Amazon. Let us look at Meta. Meta is down significantly today, and it's lost 5.71%. MACD is also very bad. It's below the signal line, and it's very, very bearish. And also the momentum is below average. Apple is looking bad also, but it's a very thin doji out here, huge indecision, with the 9-day exponential supporting at 228.95, and the share price is 229.34. So that is approximately $1 separating the 9-day exponential from the current price. I hope the 9-day exponential holds, because the momentum is pretty strong. The MACD is still bullish, but moving towards the signal line, and hopefully it doesn't cross. But if it does cross, then we are looking at a little more weakness for Apple. Google was down 1.29%, and it has lost close to 1.29% today. And the momentum is just about below average, and the MACD is very, very bearish. And ARM Holdings has lost around 9.06%. So we had a comment today about ARM, one of the videos that Sandeep had made about. So where Sandeep was looking at it from a fundamental perspective. Now the market and our opinions may not always align. We may be ahead of the market, or we may be behind the market. So at this point of time, ARM seems to be aligning with what Sandeep was saying. It has lost value. It's not because of just ARM itself. There are these geopolitical issues, and the presidential race in the US, and the statements made about how they're going to handle policy around semiconductors and AI. That's what is impacting ARM right now. And likewise for SMCI, which has lost 6.61%, and Intel is just positive 1.24%, because if you recollect, Intel had not gained much with AI. So it's not been affected as much. But NVIDIA has suffered a drop of 6.57%. But I'm holding on to NVIDIA. I'm not selling it anytime soon. It's got a huge negative MACD, bearish MACD, and momentum is also below average. I would probably look at dollar cost averaging on NVIDIA as it falls. Then I think that kind of covers what I had to talk about. I just want to take a quick look at Broadcom because I have Broadcom shares. I sold it off this morning at a profit. I had 50 shares. I had bought it before the split. I had bought 5 of them. So I'm going to buy back Broadcom. Again, the money that I had put into Broadcom had come from selling FNGU. So it's the multiplier effect. Money from CRISPR gone into FNGU, and it has given me extra money to play around with. That's what I use for AVGU. Now this amount is sitting ready to be deployed either into FNGU itself or in NVIDIA or FNGD. So I have the options out there. So I'm cash rich. I have got around $25,000 sitting in the portfolio, ready to be deployed in the main account. So that's where I am. And I think at this point of time, one of the thoughts I have in my mind is that one should not be greedy. One should take profits where they are available. If you don't take profits, then you're on the roller coaster going up and down with the market. And that's not at all fun because your growth is going to be incremental. Whereas if you took profit whenever the opportunities are there and sit on the sidelines to wait to pick up the same share again at a lower price, I think you have a better opportunity. That's my plan for this year, and that's what I'm executing. And I'm happy with it. And in the last few days, what I have done is on the Canadian side, I have Apple, Google, Microsoft, and NVIDIA. So I have kept NVIDIA with me, but I have sold off part of Apple. And I've got Amazon as well. And I've got, apart from Amazon, I've also got Walmart. I have got Costco. So those shares I'm not touching. They're all having a gain of around 35 to 40%. I'm not touching them at all because I don't see them being impacted by the AI ups and downs. They will get into AI, but at a later stage when rollout of AI becomes much more pronounced at a second or third phase of AI growth. So at this point of time, I'm holding them. I have Berkshire Hathaway, which also I'm holding, which is also profitable. So right now, the main focus for me seems to be FNGU, FNGD, NVDA, and CRISPR. So these are the 4 axes around which I have to work. Right now, CRISPR is above my target price of $55 to $60. So I have to, even if I have the money, I can't put that into it right now. So I'm waiting to see whether I go into AVGO or FNGU itself or into CRISPR Therapeutics. So that's my game plan. And I'm thinking that at this point of time, the market has already baked in a rate cut in September. So essentially, the mandate of most central banks is to focus on employment and on inflation to maintain the value of the currency. So I think at this point of time in this cycle, I think that we are coming from an overheated economy stage and we are trying to cool off the economy. And when the economy cools off, then we are going to get some relief because right now most people are unable to afford homes, unable to afford rents, and people are living with a very, very tight budget. If this high rate environment continues, there will be delinquencies with auto loans, there will be delinquencies with credit card debt, and there will also be mortgage foreclosures and other things coming down the pike. And small businesses and small cap companies might end up in a very bad shape. And regional banks might also be in a very bad shape. So we can't have high interest rates for a long period of time. And therefore, I think it's a good thing that we have at this point of time the rates coming down gradually. In September, that's likely to happen. And in Canada, it has already happened because our economy is weak right now. And we are expecting another rate cut later this month, somewhere around 23rd of July, we'll get the decision. So that's my 2 cents, my friends. And with that, I would like to bring this video to an end. I'd like you guys to give me your feedback in the comment section. Thanks and have a great day. Bye for now.